Hey guys, Jay Sherm here. In today's episode, I have a special guest with me, Joseph Park. He's a strategic partnership manager from Bybit, which is the third largest cryptocurrency trading platform in the world. Thanks for coming to the podcast, Joseph.
Hey, Jason, thanks so much for having me today. Very,
And
very excited to be here.
cool, man. And you're in Singapore, right?
Yeah, I'm currently staying in Singapore for a while. Yeah, but it's a beautiful country here.
And you
Yeah.
said it's like perpetually summer, right? So like it's like always hot. I am jealous because we don't like the winters over here.
Oh man, for me personally, I love kind of like cooling weather, but once you get here, it's pretty humid. So,
Gotcha.
yeah, next time when you come here, maybe we can go for a drink or something.
Yeah, and if you come to Philadelphia in the wintertime, bring your jackets
Uh-huh.
and your gloves and your hats because it's going to be cold.
Right, we'll take note of that. We'll take note of that.
Speaking of the cold, Bitcoin has cold storage. There's, cryptocurrency exchange storage, and you can basically store Bitcoin in a lot of different places. So
Mhm.
tell me your thoughts on Bitcoin as a store of value and why people think that it's worth something.
Ah, right, right. Okay, so the thing is, I believe the whole thing is supposed to go down to, blockchain. Blockchain technology itself is really amazing, right? But most of the people don't actually understand how blockchain works, and most of them are just in the crypto because of the money itself. It's where the money is flowing into right now, and it's just a good place to make money if you're in it. So in terms of store of value, it's a tricky question to answer because let's compare it to gold, right? On Earth, we have a finite amount of gold, right? It's one day we will run out of mining of all the gold. On a monthly basis, we have how much amount of gold we are mining, the rate we are mining, and we know roughly by when we'll finish mining Bitcoin out, finish mining gold. And based on that rate, we can roughly calculate the gold value, right? And of course, there are other usage of gold, which will be the fundamental understanding of gold. But that's the idea of Bitcoin. Bitcoin, we do have a finite amount of Bitcoin, which is 21 million. Right now, we have about 18 million plus Bitcoin. But on every 10 minutes, there's 6.25 Bitcoin that's being mined,
Well, and
and
there's
this is
there's
hard.
and there's also like how many millions of Bitcoin that are lost forever, correct? I mean, there's like
Exactly.
3 to 4 million, I think, is the number.
Yeah, yeah, yeah. I believe it should be about 20 to 30% that's
That's
missing.
a lot.
But yeah, that is a lot. And to be honest, we will never know the exact amount because there are long-term hodlers who never ever touch it, right? Like for example, Satoshi, the founder of Bitcoin, he hasn't touched his Bitcoin at all. So we
He's
don't
at a
even know
he's at a
whether he.
million.
Yeah, exactly, man. Exactly.
It's a lot of Bitcoin.
So yeah, exactly. So for Bitcoin, back to how halving happens every 4 years and the supply drops by half, it means we have a long way to go. So based on the limited amount of supply, we roughly know that Bitcoin value has to go up. The main reason is because of the miners, right?
Right.
So miners, when their overall Bitcoin amount of Bitcoin earnings is going down by half every 4 years, they cannot be expecting to earn same amount of Bitcoin in US dollar when the value of Bitcoin is going down. They
And
will be
for
expecting to earn more.
and for the listeners out there, a miner is someone who has a powerful computer, mostly called ASICs, which basically it's just a computer that's running algorithms all day, solving mathematical problems to earn Bitcoin, process the transactions. If you're sending, receiving, or buying Bitcoin, the machines that the people all around the world are running are the ones that are powering what's called the Bitcoin network. So and the halving happened in May 2020. It's going to happen again in May 2024, and we'll be down into 3.1 Bitcoin per block, which
Yeah.
is it's going to be and people think that's when there's going to be the next frenzy. So, do you think that that's why the price rose so dramatically this year? I mean, it was a combination of like Tesla announcing it bought 1.5 billion, but also the halving took place. Do you think that that's why the price went to 60,000 so quickly?
Right. So I believe when it comes to Bitcoin prediction and the price prediction, it's a very tricky because we will never know what the upper limit is. So nowadays, I believe many people are using like stock to flow model because originally it's from stock market and gold and all that. So it's very relevant. It has been working very well for over the past 12 years, right? It's been pretty accurate. So based on that fact, store of value, yeah, I'm so sorry. Maybe I should go back to that question. For
Sure.
store of value, yeah. So Bitcoin, of course, is a finite. There's a finite amount of Bitcoin. There's an amount of Bitcoin. How many Bitcoin we can mine every 10 minutes and things like that. But there is an actual usage of Bitcoin. So if you want to send amount of, like, let's say $10,000 to, for example, like South Korea or Japan, right, or over the weekends, you will actually have to wait for a long time. Saturday, Sunday, on Monday they will start processing. Maybe if they're early, they will finish their transactions by Monday or Tuesday, and there will be bank transfer fee as well. Besides that, if let's say you're sending money to somewhere, let's say developing country, that the bank feel that it's very weird transactional activity, they will even cancel it, and you will have to pay for transactional fee again, and you will have to wait again. Although it's your money, there's a third party, like controlling your money. The whole idea of cryptocurrency, it actually changes this whole thing. So you can send your money anytime with very little fees, very negligible fees. Of course, if you're using, like, for example, Ethereum, there will be high fees for now.
For
But
now,
there are, yeah, for now. But there are other altcoins with very good protocols whereby the transactional fees are almost negligible. So
Yeah, and speaking of altcoins, which brings me to my next question: why are there so many of them? There's like 1,000 of them. A lot of them do the same things as other coins. Some people say, well, why do you need 10 that does, gaming? And why are there 10 of them that do anonymity, privacy coins? And why are there 10 of them that do, NFTs? And like, why are there so many different coins that do so many different things? Like, why not just have like one for each industry? And are they really that useful? Because there's a lot of Bitcoin maximalists that don't believe in other coins. And then there's people that don't believe in Bitcoin and they believe in the altcoins. So like, why are there so many and why do we need them? That's the real question.
Right. I believe we will only have more and more tokens because, right now, if you want to create your own token, it just takes
It's
5
easy.
minutes, right? within the next 30 minutes, you can create your own token. And of course, the functionality of the token will depend on the white paper and things like that. But you can say it this way. So in future, I believe when any business, no matter how big the size of the business, it is very possible that every business will have their own token, like a cryptocurrency token, right? So it means as time passes, right now we have, I'm not sure, is it 1,000 or 10,000? But
it's a lot. There's a lot of coins out there.
It is a lot. If you go to like CoinGecko or CoinMarketCap, you see so many tokens. Like every few minutes, every 1 hour, there's a token like being released.
So you're making it sound like, so I come from a web development and mobile app kind of, that's my background. And I remember there was a moment in time in the early 2000s, when the iPhone came out and apps started coming out. I noticed that people started advertising a service of your business needs a mobile app, right? And it wasn't really a mobile app. It was more like a web-based kind of like, adaptive, responsive kind of mobile app that your business had that made it work on phones, right? And every business got this mobile app. So now you're making it sound like at some point in the future, every business will have a cryptocurrency token to do business with. So it might just be an inevitable stepping stone is what you're saying, right?
I mean, yeah, that is one of the possibility. But what I was really saying was internally, they might have their own token. So let's say there is
internally.
So let's say there's a website or like a shopping mall website. And for example, let's use an example as an Asian platform called Shopee, right? There is a point that are given to users when they shop on their website. And the users can use those points to get discounts on their next purchase, So it is very possible. Yeah, this kind of like companies.
And that opens it up to a lot of third world countries, like you said, like people that can't afford a bank account or they don't have a credit card or they don't have good credit, they can just use a token.
Yeah, and let's say a company can issue instead of giving points, they can give their users a token. And the users will receive this token. So this means every business there is, they can actually come up with their own token for their own, transactions between their clients and the company itself. So
Yeah,
yes,
just like the latest rumor that Amazon was going to start accepting cryptocurrency, which caused Bitcoin to go up, and then they
yeah.
denied the rumor, and then it went back down again. But if Amazon accepts Bitcoin, and if they create their own Amazon coin, which it sounds like they're probably going to do one of these days, then like you said, if you do a review for a product that you bought, maybe you'll earn one Amazon coin. And then you keep doing the reviews, you earn coins, and then maybe you can start using those coins to buy stuff on the platform. So that makes a lot of
Exactly.
sense. That makes a lot of sense.
Yeah, it is very possible. So I believe as time passes, we will just keep having more altcoins, and it will just become a matter of which coin has a good protocol. So
Right.
like for example, Ethereum has a smart contract, right?
Right.
Matic is a very good protocol as well. I'm not suggesting any tokens, but
Of
I'm
course
saying,
not. No
yeah, if you
financial
want,
advice. No
no
financial
financial
advice.
advice here. But then, yeah, but if you want to get into tokens, it is best for you to get into tokens with good protocols and very good fundamental, right?
Right, and
So
the team matters, right? The team, if
team
they're
matters.
if they're committing a lot of code to the GitHub repository, you can check that
Mhm.
stuff. How
Yeah.
supportive is the community? Is there Discord full of 30,000 people who are constantly marketing the product and supporting the team, using the beta that they might be launching,
Mm.
things like that. I always look for software. How does the software work? And and then when it comes to altcoins and Bitcoin and Ethereum, you're mentioning Matic, Polygon, and like all these other coins that there's like 1,000 of them. How do
Yeah.
you know? How do you learn how to be a trader in order to trade those cryptocurrencies? And what's the best?
Right.
What are the best methods for someone to get involved with it? How do you avoid
Mhm.
losing money? What are your suggestions?
Right. Okay. What are my suggestions to become a good trader? Good trader,
Yes.
correct?
Yes.
Right. Okay. So as most of you, as you know, I'm in crypto exchange. So I can't really give financial advice, but what I
Right.
can do is like I used to trade a lot,
Okay.
like in Forex, and then of course I still do trade of like crypto occasionally. Um,
Okay.
so maybe I can just give my own thoughts, right,
Yeah. Of
for
course.
traders. Yeah. So I believe the most important part is you need to have an edge in trading. So in order for you to find an edge, you need to have a backtested historical data. So you need to backtest your trading strategy on the past, let's say, past 5 years, past 10 years, and it needs to have edge on a monthly basis with a drawdown that is acceptable by the trader. Because if you in when it comes to trading, you can easily create a system that's massively like profitable. Like within like every year you're doing like 10,000%. But this kind of thing can be created just because the system is based on curve fitted model. So if a trader just, it's very fake because let's say there's indicator A that's giving you an indication that it's a good time to enter a trade,
Right.
but it's designed in such a way that if you were to change the value by like 1 point from the current place, it would immediately drop all of your profit by let's say like 5% or 10,000%, right?
Wow.
So yeah, so this kind of thing is very dangerous, which is why if you get into let's say trading bot, there are many scams. Like let's say if you look at forex industry, there are many scams whereby there's so many expert advisors which are like trading bots, but this bot does not account for those periods when the bot is not making money, but it's only accounting for the periods when it's making money.
A bull market, basically.
Exactly, like very trend based and stuff like that. So if you want to be a good trader, you need to have an edge in your trading system that's consistently making money. It doesn't have to be every day. It's a numbers game, right? So as long as like for example you have a good risk to return ratio, let's say 1 to 2, and your win rates are more than 50%, you will make money, but it's not stable enough. So
Right.
what are your drawdowns on a monthly basis or weekly basis? If you're a hedge fund manager, daily drawdown will be very important as well. So technical analysis is very important. The next part is the fundamental. So if you know Bitcoin is going down, but you're getting a long signal, should you be longing or should you be not doing anything?
Right. Should you be just holding the coin and waiting for it to go back up again?
It depends. It depends. If you're a hodler, yeah, you can have a long-term point of view. Every 4 years, Bitcoin is very unique. We have a halving period, right? Every 4 years.
Every
That
4 years, yeah.
indicates when to get in and when to get out. We roughly know that after halving happens, Bitcoin will most likely get into bull market. And the bull market will last about, let's say, 500 to 700 days, for example,
Right.
for the upcoming ones. This depends, this really, really depends, but that is the expected, days, like let's say 300 to 700 days, expected bull run period. So you just know that, after halving happened at the point of 500 days, is it a good time to buy Bitcoin? I don't know, but personally, I wouldn't,
You would
right?
sell it.
Because
You would sell it, wait for it to go down, and then you could buy more cheaper, or just don't do
yeah,
anything. Just wait.
yeah, I believe dollar cost average is very important, but if you want to do dollar cost average very effectively, do the dollar cost average at the very early period, like when the halving is happening. Like for example, the next one is 2024.
Right.
Find the exact month when it's happening, and then around that time, do most of your dollar cost average. And in the following days, you can do dollar cost average slowly, or you can take profit slowly.
Right.
DCA of taking profit. So that's one. So
Yeah, and people are always afraid to take profit because they think that if they sell it and then it goes up, that they should have waited. So that's always the tough,
Right.
So how do you know when? I mean, I know it's hard to answer this, but how do you know when to sell it at the right time? And you're saying it's to time it based on the halving, right? So sell it when you see it going up in a bull market, and then knowing that the halving happened, then it's going to go back down again.
Right. So I think it's very different. Depends whether you want to become an investor or a trader. So if you're an investor, I believe you can use, let's say, halving as your information, or on-chain data, right? Like actual data from on-chain, so that you're using relevant data. Instead of, like some of the indicators, I would not mention which indicators, but this kind of indicators will tell you exactly when to buy and when to sell. But these are very curve-fitted. It's all moving average, and moving average is very curve-fitted like model.
Fibonacci and the Tenkan and the Kijun, the TK crosses and all that stuff, right?
Very subjective. But if you're using on-chain data of how many traders, how many people, long-term holders who has more than 1,000 Bitcoin are holding, and how many of them are selling, and how fast is this number changing? For example, an example of on-chain data. What is the break-even price of miners, for example? We know that if Bitcoin hits bottom, that's most likely where the bottom price is going to be, right? So for example, let's say like miners break-even price is at $19,000. Of course, when the sell-off happens, it can go, let's say, even like 30% even lower than miners break-even price. So we can roughly calculate, that's where the miners break-even price is. So Bitcoin cannot go much, like let's say like 50% or 80% lower than the miners break-even price, right?
Right.
So
makes sense.
So this kind of like on-chain data is important for investors, in my opinion. But if you're a trader, I believe you need to use both fundamental on-chain data as well as your TA.
Your strategies,
Yeah. So for example, like your TA needs to give you a long signal, and your FA, fundamental analysis, also needs to give you a long signal. Also, like, traders always talk about having a psychology and all that, right? Like
of course.
Really, But
at the end memes, of all the memes that get circulated.
All the memes. But I'm telling you, even if you have the, even if you have the psychology of, like, let's say a rock, or even like God level psychology, if your trading strategy doesn't have an edge, you would just end up losing money. Right. It's really that.
And you can earn a decent, like you said, you can earn money trading. Maybe not daily, maybe it's weekly, maybe it's monthly, maybe it's like, you're earning some, but you can lose all of it in one bad trade. And that's the big risk, right? Is you can earn, because, we've all done it. We've all traded and made money consistently, and then boom, one bad trade, it's all gone. And we're like, oh man, all that time was wasted. So you really got to be careful. I think your idea of, doing it consistently, using the fundamental analysis and the on-chain analysis, like using both the TA and on-chain, that's a good way to look at it, because you're kind of backing yourself up properly. You're not just going with one strategy, you're going with both to make sure that you're doing the right thing. And I guess you currently work at Bybit, so you're going to say that Bybit is one of the better platforms to operate on. Like, tell me a little bit about why Bybit is such a great cryptocurrency platform to trade on.
Right. Of course. So in this comparison, I will not mention the exact names of other exchanges. I will just use Bybit as a comparison, right?
Yeah.
So there are many great exchanges. Bybit is currently top 3 in terms of trading volume. So on Bybit, we are very specialized in derivative products. So it means leverage trades, right? So
Leverage trading. That's
yeah, leverage trading. If you're a great trader, leverage is really good way to make money. But if you are not very good and you're, let's say you're not experienced enough, there's a very high likelihood that most of the retail traders actually lose money. So, yeah, so this is something that everyone should take note of, and they should be, they should acknowledge. For Bybit, one of the main reasons why Bybit is so good, in my opinion, is because we have a very good customer service. Unlike any other crypto exchange, whereby you have to wait for hours or even days to speak with the
yeah.
customer service, or let's say your money is gone, you need to get the information fast from their customer service or their internal team. You can't get it right away. You have to wait for a few days, which doesn't make sense. On
Right.
Bybit, it's immediate. Of course, when there's a
Wow.
high traffic, of course it can take, like, waiting time can take up to 3 minutes, but most of the time it's about 45 seconds waiting, and that's
Wow.
yeah, and that's really rare in
That's
crypto.
lightning fast.
Yeah, exactly. So
Holy crap.
in Bybit, we do put our clients first. That's the highest priority. So that's one. Another one is liquidity. So many retail traders may not know the full definition of liquidity and how it works, but liquidity is really, really important. So let's say you want to sell, for example, let's say there are 10,000 Bitcoin that needs to be sold on the exchange, but if the exchange doesn't have liquidity, the price could potentially like drop 50% and then pump up 50%,
Right.
which is why sometimes we have something called candle wicks, right? Just yesterday on 26th of July, when the Bitcoin was pumping,
Yep. Went to 40,000 and then it went back to 36,000.
yeah, exactly. On one of the exchange, BTC inverse perpetual, they had whereby the price actually pumped up to $48,000.
Wow.
Although in the spot price, the price didn't go even above 41, right? So
Right.
this kind of bad liquidity actually takes huge part in traders' behavior, because a trader's journey, because you can be right, but just because of the exchange issue or the market maker's issue, you can potentially lose money that you should not have lost. So
Right.
that's one. Yeah, and another thing is Bybit. Of course, the frequency of the candle wicks is very important. Bybit has the least. It happens very, very rarely. I believe until now we only happened like once or twice.
Wow.
Like yeah. So
That's impressive because if you go on Twitter and you read about other exchanges, right, they are constantly having outages when the coin price pumps or it crashes. People are locked out of their accounts. People
yeah.
can't trade. People can't close out their orders, and people are just complaining all across the internet about it. And it happens every single time. It's not just once. You're saying it only happens once or twice. No, these guys, it's happened 100 or 1,000 times, so that's impressive.
Yeah, so stability is really important. And I can assure you that no other exchange, so this is one of the main reasons why I decided to join Bybit as well, because Bybit is one of the only exchange whereby it really focuses on the clients and actually
Right.
compensates the traders if the traders lose money because of system error, or let's say the candle wick was because of Bybit's fault, for example. Oh, I see a little dog behind you.
That's Wolfie. That's my Doge. My Doge coin
Oh,
over
your
there.
Dogecoin.
Little
Yeah.
Wolfie. Yep.
Yeah, so as I was saying, Bybit was the only exchange that actually compensated the users for the losses they suffered. And unlike other exchange whereby they only post on Twitter saying that, oh, this was the issue, sorry, but here's the reason.
Right.
That's all they do. They just state the reason. But it's actually people lose a lot of money, and it's
Yeah,
really
of course.
hard-earned money, right?
People not only lose their money, they lose their life savings. People
Yeah,
have lost their houses. People have lost their wives because they left them because they lost all their money. Like the stories are endless on people losing a lot of money on crypto. So that's why our suggestion here is to be very careful what you do.
yes,
Only invest what you're willing to lose.
that's
Don't
correct.
go all in. Do a lot of research. Learn some technical analysis, choose a platform like Bybit where they have really good customer service, where they help the customers, and just make sure that you know what you're doing, that you don't just think you're trying to get rich overnight, because it's very difficult to do that. It takes time to become a trader. It takes time to earn profit. And if you're concerned about losing money and you're not sure what to do, like Joseph and I said, just buy and hold and don't trade. Just wait 5 years. I have a friend who literally has been buying Bitcoin for the past year. She's a single mom, and she's been buying Bitcoin for the plans that when her son turns 21, he's only 1 year old.
Oh,
When he turns 21, she's going to cash in whatever she has. And I'm like, by then, he's going to be a millionaire.
yeah.
20 years from now. I mean, how many halvings? That's 5 halvings. I mean, come on. Like, so I'm like, anybody out there who wants to become a millionaire, buy Bitcoin and Ethereum and other coins now and hold them for 10 or 20 years.
That is true. That is true.
But we all think short term, like, 1 year, 2 years, 3 years, 4 years. So that's great. Joseph, it was a pleasure having you on this podcast. I'm sure people learned a lot. Is there anything else you want to share with the public in terms of, philosophies or any kind of words of inspiration or encouragement in the crypto world?
For those of you who are trading and, buying into cryptocurrency, just one thing I can let you know is we study in college for like 4 to 5 years. 3 to 5 years to get a job they can pay us on a monthly basis. Many traders, they want to learn how to trade within like 1 week or within 2 months to make a fortune out of it. It's just practically, it doesn't make sense, right?
It's impossible.
Yeah, exactly. So if you're really serious about being a trader, successful trader, you will have to put in a lot of time. And of course, manual trading is good, but I would suggest you to learn a bit of coding so that you can automatically backtest your trading strategy. So for you to actually, get out of the human state and be a full machine when it comes to trading. And
nice.
So have an edge.
Awesome.
Have an edge in your trades. Do involve fundamental understanding of how the cryptocurrency and the stock market works and how the US dollar index works, because Bitcoin is valued in US dollar. You need to understand how the US dollar is like, because it will affect the Bitcoin price. So
absolutely.
That's
awesome.
That's all my thoughts, man.
Thanks again, Joseph. This was great. And hopefully everyone out there listening or watching has learned a thing or two. Happy trading. Good luck. Don't lose your money. Be careful. None of the stuff we talked about is financial advice in this episode. And we'll see everybody in next week's episode.